Good morning, viewers. It's Wednesday morning, April 23, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Stocks rebounded with no new Powell bashing or trade tirades from Trump. Wall Street's flipped to buy mode on Tuesday without any fresh criticism of US Federal Reserve Chairman Jerome Powell or flip-flops on tariffs from President Trump to disquiet markets again. With little other news on those fronts, investors were more focused on earnings. US stocks rebounded on Tuesday as a spate of quarterly earnings reports brought buyers in from the sidelines. Indexes rebound more than 2.5% after starting the week with a hefty sell off. A broad rally boosted all three major US indices by more than 2.5% as investors looked past Trump's ramped up rhetoric against Federal Reserve Chair Jerome Powell, who is widely considered a stabilizing force for the markets. The Dow Jones Industrial Average rose 1,017 points or 2.66% to 39,187. The S&P 500 gained 129 points or 2.51% to 5,287. And the Nasdaq Composite gained 429 points or 2.71% to 16,300. The S&P 500 notched its best day since April 9 after a series of reports nurtured Wall Street expectations that tariff-related hostilities were easing as the US makes progress in fleshing out agreements. But having been battered for weeks by the White House's erratic and multi-front tariff disputes, the S&P 500 remains nearly 14% below its record closing high reached on February 19. Following a report that US Treasury Secretary Scott Bessent had said a tariff standoff with China was unsustainable, indexes reversed Monday's tumble, hitting session highs. Bessent also remarked that while trade negotiations with Beijing were likely to be a slog, he believes that there will be a de-escalation of US-China trade tensions. Bessent's comments came against the backdrop of International Monetary Fund sharply lowering its forecast for world growth this year and next, along with warning that the outlook could worsen because of the trade war. Those uncertainties helped prompt the IMF to slash its forecast for US economic growth to 1.8% in 2025, citing the impact of US tariffs now at a 100-year high. The IMF slashed its global economic forecast too, warning that tariffs were ushering a new era of slower growth. First quarter earnings seasons gathered steam. So far, 82 of the companies in the S&P 500 have reported. Of those, 73% have beaten expectations. All members of Magnificent Seven closed higher on Tuesday. Meanwhile, shares of industrial conglomerate 3M Company jumped 8.1% after the company posted better than expected first quarter profit expectations, though it flagged a likely hit to 2025 profit from tariffs. Northrop Grumman slumped 12.7% after it reported a sharp drop in profit and cut its earnings forecast for the year. Aerospace and defense company RTX tumbled 9.8% after flagging a potential $850 million hit to its annual profit due to tariffs. Huggies maker Kimberly-Clark said a shifting global geopolitical landscape was partly to blame for a lower profit outlook. Verizon Communications Incorporated reported a larger than expected decline in mobile phone subscribers in the first quarter. Shares still closed the session 0.6% higher. Traders then turned to Tesla Incorporated earnings. The stock rose 4.6% on Tuesday, but remains 41% lower this year as controversy over CEO Elon Musk's role in the federal government has contributed to a global sales slump. After markets closed, Tesla reported adjusted earnings that missed analyst estimates. The company said President Donald Trump's trade war has adverse impacts on its global supply chain and could have a meaningful impact on demand in the near term. Shares were little changed in extended trading in New York as of 4:10 p.m. Some of the main moves in the market, the CBOE volatility index retreated below 31. Wall Street fear gauge had jumped on Monday. In currencies, the dollar spot index rose 0.5%, cryptocurrencies, the price of Bitcoin topped $91,000 as it rose 4.8% to 91,530. In bonds, as Treasury yields edged lower, the yield on 10-year Treasuries declined 2 basis points to 4.389%. In commodities, West Texas Intermediate crude rose 1.9% to $64.31 a barrel. Gold, meanwhile, retreated after surging early Tuesday to a record high above $3,500 a troy ounce. The precious metal, coveted in times of uncertainty and stress, has cemented its status as the undisputed winner from this month's tariff-fueled market turmoil. Spot gold fell 1.4% to $3,375 an ounce. Stock futures opened higher after President Trump told reporters Tuesday evening that he has no intention of firing Federal Reserve Chair Jerome Powell. President Trump said he is not planning to fire Federal Reserve Chair Jerome Powell, and he signaled that tariffs on China could be lowered. My take: the roller coaster continues. The uncertainty is still too high. Investors' concerns over President Trump's trade war and his threats of firing Federal Reserve Chair Jerome Powell had stirred up market volatility on Monday. This rhetoric dissipated on Tuesday. Some thawing of the aggression between US and China, thanks to Treasury Secretary Scott Bessent's comments, helped push things higher. The uncertainty around tariffs is hurting markets, and even an iota of positive news translates into going forward on the trade front. A volley of tariff-related headlines during Tuesday's session continued to fuel market moves as fast-twitch investors poured over news reports for clues on how to trade the crisis. News that the ball is moving in the right direction with China and a nearing of general agreements with Japan and India on trade came as a relief. Current earnings are showing a continuation of good fundamentals, which is not a surprise. Yet, investors are parsing corporate guidance for clarity on what companies are planning to do in response to tariff policy. And uncertainty on that front is holding back corporate decision making and keeping asset prices under pressure. In this period of extreme uncertainty, one should not react too much to daily moves in asset prices. The biggest driver in the short term is whether or not the US does indeed have a recession. However, longer term, this is a great opportunity to be dollar cost averaging into this price weakness. A lot of negativity has been priced in a short period of time for US equities. But until there is even a semblance of steadiness, the roller coaster continues. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I'll see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it's all about money.